somebody came to one of my classes at Columbia Business School and they said, do you want to know what Buffett's secret is? And he said, no, like all of you are getting it wrong. The value of what Warren Buffett does at Berkshire, but in the market at large, is a handshake.
Welcome to today's edition of Market Outsiders. Today, we're talking about the Oracle of Omaha, Warren Buffett himself. He is 95 years old and still wheeling and dealing. So we're going to talk about his latest deal today, $10 billion for a petrochemical company. Before we dive into that, if you have not yet rated, reviewed, or subscribed to Market Outsiders, please go ahead and do that. We very much appreciate it. Jenny Rae, before we talk about Buffett, I have to ask you, are you a shareholder in Berkshire Hathaway?
I thought you were going to ask me if I'm going to retire before I'm 95, but
I know the answer to that's no.
Yeah, let's hope, right? Yeah, Buffett's, kind of famous news this year is that he decided to finally step down as the CEO of Berkshire Hathaway at 95 years old. So, I don't know. I've been really impressed. I am a shareholder of Berkshire Hathaway. It was not a financially strategic shareholder purchase, although the stock has done well. I don't hold individual stocks, and Berkshire feels like it fits that mandate because there are no individual stocks
mini index,
inside
right?
Berkshire. It's like, yeah, it is, right? It's basically the Buffett index. And I also really wanted to go one year to the Woodstock of Capitalism in Omaha, the shareholder meeting for Berkshire Hathaway. So when I was in business school, graduating, I took my youngest son. He crawled around the floor, and I was like amazed and delighted. It was a cross section of New York hedge funds and like Midwest boot wearing, truck driving investors. It was institutional investors, foreign investors. It was America. There were Buffett was just so bullish on America that it was really encouraging. So I've actually gone back. I took my whole family the next time a couple of years later. And if anybody has not had a chance to do that, you probably don't have many years while Buffett is still alive. But you can buy, you can buy the big shares, which are hundreds of thousands of dollars, or you can buy a fractional share for a lot less than that. And that's your ticket in, or you can just, make friends with somebody who already owns. But anyhow, super worth it, Namaan. And I'm really excited today to just kind of talk a little bit about what I see in the Buffett Playbook for this deal specifically. I think that if you've never studied Warren Buffett, there are kind of two pieces of the Buffett Playbook that matter here. One is the deal and the other is the business that they bought. And so we're going to kind of break those down separately because in the news, a lot of those get conflated and then it's hard to figure out if you want to speak intelligently or extract business acumen from it, what the story is. So I know the answer to my next question, which means it's a great question. Anytime you're in the biz, Namaan, you should always know the answer to your question. This is one of the rules. But have you ever been to a Berkshire Hathaway shareholder meeting?
I have, and I loved it. I flew into Omaha for 24 hours. We were there together and had a blast. The rationale for me was exactly what you said. Like, who knows how much longer we're going to have Warren Buffett with us. And so I want to go kind of see him and hear him in person while I can. I want to kind of walk the floor of all the portfolio companies and get pitched to every 2 seconds and see Fruit of the Loom and see Pilot and see all of these, just see the trade floor. And it was a lot of fun. And yeah, I don't regret it at all. I learned a lot. I sat there thinking, in the top row of this 20,000 seat basketball arena, it's like, this guy is 93 years old. He was 93 at the time. He's 93 years old and he's sharper than most people I know. So I was blown away by the stamina, by the insight, by the clarity of his thought. And so I'm really excited to dive into this deal today.
Is that why you went home and advocated for your wife that you have McDonald's and a Coke every day for breakfast?
I think that's his
Tell me the
secret,
truth.
right?
Yeah, totally. That's the secret to longevity. He breaks all the rules. Well, I'm really excited to talk about this. I had some unique kind of insider exposure to the Buffett and the Buffett way in Berkshire when I was at Columbia Business School. So I'm going to pull up the article. We can share a little bit about this deal and then we'll kind of back into the context here. So, one thing that you'll always note is that the news isn't about Berkshire Hathaway. The news is about Buffett. So Buffett has this, cachet in investing that means something. And I would argue that part of what Buffett has done is use that cachet to, that his deals are stealthy. They're always announced after the fact because there is kind of like Berkshire itself is a Buffett index, but there are actually other Buffett indexes that follow the companies that Buffett buys, and they kind of make the assumption that if you buy even after Buffett buys, you're still going to beat the market. And so this deal, right, $9.7 billion is Buffett's biggest deal in 3 years. When I read that headline, Namaan, I thought, oh, that's a pretty small deal. And I thought, how funny that we're sitting here in 2025 and $9.7 billion is a small number. And so, right, Berkshire Hathaway reached the deal to buy Occidental Petroleum's petrochemical unit. So it's not all of Occidental Petroleum, just the petrochemical unit, OxyChem, for $9.7 billion in cash. Berkshire has not done a deal of this size since 2022. Now, that doesn't actually mean that Berkshire has not accumulated positions in other companies in that time. They just weren't in a single deal size. So they've done a ton of open market trades where they'll buy $1 billion or $4 billion or $2 billion at a time of something accumulating up to larger positions. I think of Apple as one of those plays that they've made in the last few years. And then this kind of talked a little bit from the CEO about the debt reduction resulting from the deal that will enable her company to restart buying back stock. So, Namaan, we've talked a little bit on the pod about what stock buybacks are, what they do for the stock, whether they're a good idea or a bad idea. Can you just give a really quick recap of what this sentence means? Because this is one of the deal dynamics that I wanted to highlight before we dive into the business itself.
I did too. So I'm glad you emphasized that. So put simply, a stock buyback is a company reducing the number of shares outstanding. And so let's say there's 100 shares of our stock that are outstanding on the market and we buy back 10 of them. What we're doing is reducing the number of outstanding shares to 90. And so we're returning cash to shareholders, but what we're also doing is we're raising the value of the existing shares that are outstanding because there's just less of them now. So when you lessen the supply for something without reducing the demand, the price is going to go up. And so not only do you now technically have more ownership over your own company, but more importantly, you're returning value to shareholders because their existing shares are going up in value. So that's the premise behind a stock buyback. And to me, this is the key lever, in this deal, right? Like the cash outlay that Berkshire's making here is going to enable OxyChem to move beyond its debt burden and then start to actually deploy capital in a way that's going to add shareholder value. And you already mentioned it, and I just wanted to second it. I think what Buffett is thinking here is okay, my capital here can pull a very distinct lever that's going to add value quickly. So that's why I'm going to move forward here. There are a lot of other businesses where the 10 billion would be spread around a million different places. There wouldn't be one clear lever where you could use it to very quickly extract value, which is why I think that this is a deal that got done when there's a lot of other opportunities he's had in the last 3 years he's turned down.
The other thing that I just want to say is that your understanding of macroeconomics matters here, because 3 years ago, you wouldn't have done this deal for this reason. There would have been no reason in an era of nearly zero rates of prime to reduce debt, because all you would do is refinance your debt down to extremely low levels. You would have kept that cash deployed, and you would have optimized that. So this is most likely debt that is maturing, that is at different rates, this is both debt reduction that they have right now, but also the risk of debt resettling at much higher rates, which will not just keep cash going out to the debt, but it will also pour more cash into the debt going forward. And so you don't kind of understand, think about this really simply as if you were a consumer that was thinking about reducing debt, right? If you can get debt and keep it at 0%, you're going to keep it for a very long amount of time. But when the day it comes due is there, then you're going to have choices to make, whether you service the debt or whether you save for your future. And debt saddles those future-driven choices. And so, I think that's kind of a really essential piece of what's going on here. here. I did not look into the deal, but they are public, and this would be a great homework exercise, is to go get the 10K, which we'll link to here in the show notes. Go take a look at what's happening, what business they're in, what they're selling, what their debt burden is, what their payments are, because basically you should be able to draw not a straight line, but a pretty wavy line, not a circular line, between what that pay down is going to be. So whatever the interest expense is, to what we could expect for the share buyback. So these are deal dynamics, right? This is not the business. This is the deal dynamics. This is what we're thinking about when we're thinking about the deal. So, we already kind of covered a couple of these, but this to me was the sentence in the story that caught my eye, Namaan, and it made me wonder, why are we doing this deal? Is this a financial engineering deal only, as we just mentioned, or is there something else that's going on here? So the conglomerate is sitting on $344 billion in cash. And usually, in those kinds of situations, businesses are punished for not returning that cash to shareholders, and or not deploying that cash somewhere inside the business, because the value of cash is generally negative over time, because you're missing out on incremental opportunities. Now, when they say cash, I'm sure it's invested in treasuries, right? So there is some actual return on it, but really, like, what we're saying here is that 9.7 billion actually was an exercise of fiscal discipline, for a company that had way too much money. A lot of times people in M&A deals for cases will be like, hey, look, I think the fundamental question was whether or not the company had the money or not. If you're working for a company that's asking that question first, it's always the wrong question. The question is whether the deal is worth doing, and whether it's worth doing at the price, and being able to walk away from deals that are not worth doing is, I think, substantially essential. So anyhow, this was not a situation where Berkshire was like, well, we could have paid 9.8 yesterday, but today we're out of that $100 million in cash. So 9.7 is the best we can do. And I want to talk about one more thing about deal dynamics I learned at Columbia, and then we can move on maybe to the business. Did you have something you wanted to jump in with?
I was just going to say, and I think we'll find this out later in the article, but to me, this only makes sense if Berkshire already has a position in Occidental. So,
Great.
like, if you don't have a position in Occidental, $10 billion doesn't move the needle for you. But if you already have built a position in the business and you're like, okay, we're going to be able to invest an additional 10 billion in capital to kind of free up this division from the shackles of floating interest debt so they can really start to invest in its growth or invest in returning capital to shareholders. Okay, now it's not just about the $10 billion, it's about all the money I've already invested in the company. And so you can actually see here, it's the next paragraph, right? They already hold a 28% stake in the company. So that's why it makes sense. But if they held a 0% stake in the company and they're coming with $10 billion, I don't think it makes sense, because it's not going to move the needle for them.
Yeah.
Do your projects ever drag? Budgets creep? Deadlines slip? Or worse, do you deliver something that meets the spec, but no one's happy with how it got done? If that sounds familiar, it's time for Management Consulted's Project Management Training. Our program brings consulting-level rigor. These are the same tools and approaches that top consulting firms use, in a format you can deploy across your team now. You'll learn how to build battle-tested project plans, anticipate and manage risk, align stakeholders early so surprises are minimized, track progress transparently, and hit those milestones without burning out resources. Each training includes tailored project templates, real case studies, and live feedback. No fluff, all impact. If you lead teams, work cross-functionally, or just want fewer late nights chasing deliverables, this is for you. Head to managementconsulted.com/project-management-training. That's managementconsulted.com/project-management-training to invest in a program that will save your team time, money, and heartache.
So, we're kind of getting to some of the other good stuff here, but again, we want you to understand how to look at this just beyond the surface as well. So the Buffett Playbook, if you haven't followed him, is kind of this, right? This is the modern playbook. There was, by the way, a early Buffett Playbook that kind of got him into Berkshire Hathaway that is also worth studying. But the current playbook is this. It's, get to know a management team, do an excessive amount of research in an industry, literally do whatever you can to buy a company that you will never sell, to figure out what the value is of it long term. He refers to the moat of the business substantially in his, in his teachings, his writings, his speaking, and then allow the management team to do what they already were doing in order to realize those returns. So he is an activist investor in that, in only one way, which is that he'll take a seat on the board, but not in I will usually replace the management team. I will dictate the kind of follow on of what needs to happen next. So we did a conversation about Kraft Heinz a few weeks ago, which we can link to here. Totally different model. And the Berkshire Kraft Heinz 3M deal was like the model of two different operators, right? When you're thinking about who's kind of buying that deal. So anyhow, one of the things that I found super fascinating was that somebody came to one of my classes at Columbia Business School, and they said, do you want to know what Buffett's secret is? And everybody had a take. Like I think I even probably waited on this, but it was like, his value investing, his reading, his insight, his financial engineering, his blah, 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 blah. And he said, no, like all of you are getting it wrong. The value of what Warren Buffett does at Berkshire, but in the market at large, is a handshake. And I have never forgotten that because it was so, so powerful. He said that people will come to him with deals. And I don't know how this one originated, if they were just sitting there in their office one day looking at this space and decided to take a stake in Occidental, or if the board or the shareholders or the management team of Occidental said, hey, Buffett, we'd really love to have you on board. But a lot of their biggest private deals, like the pilot deal, were not marketed. They came directly to Buffett. They asked him to buy the company because of the understanding of how, as a gentleman, he would allow them to continue to run their business in the future. And there are only so few people, right? There may be only one who can deploy the kind of capital that Berkshire can deploy at the size of some of these businesses, but also will take a very hands-off approach afterwards. So I thought that was a very final piece of the deal dynamic that is essential to understand here. And I don't know enough about the history. As you mentioned, Namaan, part of that playbook is that Buffett never takes 100% share at the very beginning. So all of it is accumulating an early share, seeing what the company does as they're doing that, taking a seat on the board, getting to know the business a lot better, and then kind of moving in to it. By the way, they also mentioned they're going to use $6.5 billion, so 2/3 of the deal amount, to pay down debt. So this is potentially largely quite a financial engineering deal. But I just wanted to spend some more time, Namaan, if you're good with it, just talking a little bit about OxyChem. I don't know what you know about them. If you don't know anything, let's talk about what you would want to find out. But OxyChem manufactures these three things, right? Water treatment, healthcare, and other commercial chemicals. So think of commercial cleaning chemicals, commercial operating chemicals, commercial manufacturing chemicals. Tell me what you would know about this business to start out with, right? Let's say you got a case on it and you're like, hey, this business, OxyChem, we're a fund and we're thinking about buying them. Should we buy them? Yes or no? What would you want to know? And then also, what do you know? And then also, what would you want to know? What are some of the things you'd want to know about this business?
Yeah, I don't know much besides for what they do, to be honest with you. My hypothesis is that it's like a high margin business, actually. So my my understanding is that if you are if you're needing water treatment or healthcare or other commercial chemicals, you need them. It's not a luxury purchase. It's a necessity for the buyers. So there's potentially some pricing power there if you're OxyChem. And now that would be kind of counterbalanced by the fact that these are probably commodities. There's potential that you've got a competitive set that also offers the same chemicals. So the danger of being in this kind of business is it could be a race to the bottom in terms of price. So one of the first things I'd want to know is, okay, how big's the market? Second thing I'd want to know is what are the growth trends in the market? Third thing I'd want to know is what does our product mix look like and how much is it proprietary versus not proprietary. Fourth thing I'd want to know then is, okay, great. Like, what is our market share by competitor? And that would start to give me a good sense of like just like the sandbox that we play in before I start to get into like more around the product, the service, who our customers are, like how we operate. But until I had some of that like external context, I don't think some of that internal data would do me as good looking at a business like this.
That's great. And so, Naman, thinking about some homework in the 10K, right, the way that we would have to go figure this out if we were looking at a deal, we wouldn't, by the way, only look at deals that a business was thinking about doing at Bain. We would look at deals that other spaces, other places and spaces had done. We'd look at deals that that company had done. Like we were looking for deal clues in a lot of different places and often extrapolating a lot of those deal clues in order to make these kind of more advanced financial models. My best guess is that OxyChem is going to report their margin, but they're not going to report their margin by segment. So they'll report their revenues by segment. They're going to report their margin overall. And one of the biggest puzzles in all of business, which Berkshire had access to as an investor in this business and a board seat holder, was the ability to actually break down the business lines. Because one of the most I would say one of the greatest mismanagement tactics, if you wanted to mismanage a business intentionally, which most people don't, but a lot of them do it unintentionally, is to focus on the wrong segment of a business to grow or to operate, right? And in order to take a hands-off approach, you have to believe that both the business is durable, right? So an active approach is not required in order to sustain the health or life of the business. You also have to believe that the current operators are focusing on the correct areas of the business. And so I would want to look for any clues I could find inside the 10K, which generally aren't going to be in the charts. It's going to be in the notes and in other places, and it may be off the 10K. It may be also in analyst calls, but talking about the margin, the growth, and the customer profile of the individual segments of the business. So I think that they're exactly right that would be, a very, very important strategic thing to know. Anything else you want to weigh in on that?
Well, I would just say, as we wrap up today's conversation, my recommended reading wouldn't be everything you just mentioned. On top of that, I would say if you're interested in Buffett's philosophy, go back and read his annual letters to shareholders. Almost all of them are publicly available. They've been published like in books where you have like 50 years worth of letters in one like nice leather bound copy. Like I think it's essential reading for anyone who's interested in business or investing. So highly recommend reading his annual letters, and we'll see if we can track down the latest one and publish it in the show notes.
Yeah, that'd be awesome. Look, at the end of the day, this article talks a ton about the deal dynamics and very little about the business that the deal was about. And if you want to become savvy about business acumen, sure, it's great to understand what the terms mean for a deal underneath the surface. But the reality is that unless you're in finance, the majority of the work that is done in the business world, internal and external to companies, strategically consulting, internally from an operation standpoint, is done as an operator, understanding the business dynamics. And so I would really encourage you to understand, in homework, what OxyChem does. I think this kind of space with buyers that are not consumers helps you really understand a area of the business world that begins to help you connect the dots in a way that is really powerful. I had two final experiences, Naman, that I just wanted to wrap with. One is that there was a business that was like this, that somebody that I was at Bain with left to go work for, doubled her salary in the first day when she went over there. I'd never heard of them before, but they supplied building products like concretes and other products for road manufacturers, i.e. like you or I don't build roads. This is, governments that are their normal contractors or government contractors that are working for governments. Again, like pretty high margin business, big moat around the business. So I can draw a tie between something that I learned almost 20 years ago and this deal today, and that's how you like really accumulate business acumen over time. And the second one is that when I was in business school, I went out to breakfast with a woman who worked in the chemicals industry, and one of her pieces of advice was, work for a company that owns its own private plane. Yeah, and she said, the chemical space is unbelievable. Like there isn't a company in it that doesn't own private plane. What that means is that they have high margins, cash to deploy, and they're going to pay you and treat you incredibly well. So it was again like it was an offhanded comment. We talked all about her business, her life, and a whole bunch of other things. But those are some of the anchors that I hold on to, so that when I come to a deal like this for OxyChem, I have a little context to start with, and we want that for you as well. So thanks so much for listening today. Like Namaan mentioned, please subscribe if you haven't already subscribed. We'd love to have you stick around. We have a running backlog of some of the great suggestions that y'all have given us of companies to go over. So you'll see some of those start to come out in the next few weeks. If you've got one, write us, add it to the list. And always, we appreciate your ratings and reviews. We love doing what we do, and we're grateful that you joined us today. Thanks so much.